is one of the main sources of direct taxes. Every person has to pay if his total income exceeds the limit fixed by the government every year. So, income tax is a main source of direct tax. It is responsible for every person to pay if the income exceeds the limit fixed by the government every year. It is calculated on income of previous year, but it is to be paid in the consecutive year called assessment year. So income tax is calculated on the previous year, which means the year which income earned, but it is to be paid in the assessment year. Then every year the central government made various amendments through union budgets. These amendments pass through the parliament, get the approval of the president of India, then it becomes Finance Act. Every year steps are taken to simplify the tax system. Then we move to history of income tax. The following are the years during which important amendments were made in the act. So it starts 1860, introduction of income tax by Sir James Wilson. 1886, separate income tax act passed. 1918, new income tax act passed. 1940, Directorate of Inspection. 1952, Directorate of Inspection investigation was created. Then likewise a formation of reference law commission and report submitted by law commission and report by direct taxes administration inquiries. And the main year is 1961, framing of income tax act. So we tell income tax act 1961, but it comes to force on 1962 on April. 1963, Central Board of Direct Taxes created, and 1997, rates of income tax reduced significantly, and then last 2002, computerized processing of return of all over the country. Thank you all.
Rent allowance, rules and formula. First point, actual HRA. Second point, 40% or 50% of salary. Rent paid 10% of salary. Problem number 1. Mr. Abdul is employed in Arogya Limited, Chennai. He received basic salary rupees 12,000 per annum. Rear allowance rupees 300 not forming part of salary. House rent allowance at rupees 6,000 per annum. Actual rent is rupees 7,000 per annum. Computed is taxable house rent allowance. HRA. HRA 6,000, basic salary 12,000, actual rent 7,000. HRA receive 6,000 into 12 months 72,000. Less exempted. Actual HRA, this also same. %50 of salary. Salary 12,000. 12,000 into 12 months. 1,44,000 into 50 divided 100. Chennai, this is a metro city. 50% of salary equal to 7,200. Rent 7,000 into 12 months equal to 84,000. Salary 1,44,000 into 10%, 10 divided 100. equal to 40,400. 84,000 minus 40,400. 69,600. 72,000 minus 69,600. Taxable HRA 2,400. This is a answer. Solve the problem. Thank you.
Expand income, agriculture income, section 10.1. Any income derived from agricultural land situated in India which is realized from agriculture operation are full exempted. Any rent or revenue derived from land which is used for agriculture purpose. Any income derived from such land by agriculture promise and income attempt to a from house subject to center contain a agriculture income through it is exempted from test. It is to be a agreed in center case for the purpose of determining the rate of term on non-agriculture income. Leisure travel consisting Section 10.5. When a employee receives a leave travel concert from his employee once is for 1 year, one is the black. He can claim exempted subject to a following. When journey is performed by air economic phase of the natural certain. When journey is performed by the rent rate up to air condition from class rent